Hello, 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 everyone. Mike Arnold here, co-founder, Pat Trading Partners, along with soon to be on at some point, Bob Iacchino. How is everyone doing? Hello, Patrick. Good afternoon, Mike. Thank you, Davey. Good afternoon, Davey. Uh, George, another good afternoon. So rallies are good. There we go. Good afternoon, Sashi. Good evening, Anissa. Good afternoon, AP's World. Hope everyone had a wonderful trading day. Gotta love the easy money, according to Gary. All right. So we did get the continued rally. Some interesting patterns. You have also the Twitter the Twitter thingy going on today. So it was always an interesting day. We had Red Book this morning coming in a stronger than previous. Oh, by the way, hello, Josh. Hello. Hi, Gary. Hello. By the way, I'm going to start, we're going to start. It might be me, it might be somebody else. If you're going to put up inane, and I'm not referring to anybody who's already checked in, but if you're going to put up inane comments or just want to argue with people or just want to troll the channel, I am going to start blocking. That is just giving people fair warning. Okay? If you'd like to be a productive member of the channel, then wonderful. If you want to help people learn and grow as traders and investors, wonderful. Otherwise, the patience has been worn out. Good afternoon, Sterling. Hey, Coco. Good, because I'm riding the trend finally, not fighting it. Which trend, the short term or the long term? So, go Sterling, the new mod. All right, well, we'll get Bob on it. You know what? If you're new here, just subscribe. I'm just going to tell you what to do. Hit the like button. We'll just get Bob on because I'll get his thoughts about everything. Because you've had Bob withdrawal for a few days, and let me make sure the magic guest button still works, and make sure his wall was hurricane proof. Was your wall hurricane proof?
My brick wall was hurricane proof. It protected this whole place.
The whole place was protected by your.
Look how good it is.
I see that. Look, it withstands even what I don't know what you threw, but it withstood it.
That was a paperweight.
Well, I'm sure everybody's just wants to hear from you, Bob. I'm just going to disappear into the background. It's been some eventful market moves since you've last been on. We had the sell-off on Friday. Now we have the rip your face off rally.
Yeah.
Yep.
Yeah.
We have, again, all I'm getting is the constant banging of the drums, pivot, pivot, pivot. It's like a repeat of middle June, early July again. For me, so at least. All,
again, we need to stop calling it a pivot. They're not going to start cutting rates. They're not. Okay, so lose that right now. That's not happening. Again, I continue to find it very strange that people somehow think the Fed is going to give a crap that we're in a recession when they've said over and over again that there's going to be economic pain. What did you think they meant? What did you think they meant? By the way, the Atlanta Fed GDP now is positive. I mean, it could change, but it's positive. They said they need to see movement in payrolls, in jobs. We haven't seen that yet.
Well, hold on. Wait, I gotta stop you there, Bob. I gotta stop you there for a second. We had the JOLTS job openings decline by record amounts. That's all they needed, Bob. I think Bob froze. I did not hang up on Bob. He might still be having internet issues. So we'll just wait for Bob to come. Here we go. Here we go. I'm still waiting for Magic Bob to appear. I hit the button. I hit it. There is we're waiting. Let me just make sure everything's okay on my end. Uh, let's see. Everything, yeah, I'm on my correct. Let's see. Well, let me just text him. Here we go. You. Ah. Sorry about this, everyone. There we go.
Shouldn't have stopped me.
Shouldn't have stopped you.
You said I got to stop you there, and then you were gone.
You were gone.
Well, man, one of us was gone, but I'm just saying you shouldn't have stopped.
You're the one who disappeared. I was here the whole time. People on this live stream can vouch for that.
So basically, I said that the Fed needs to see movement in jobs, and you said, "Wait, I got to stop you."
But we had the record a very high decline, not record, very high decline in Jolt's job openings. That's all they needed, Bob. That's all they needed.
Yeah, that's not going to be enough. Now, look, we could see. Okay, so two things. Number one, I did a show yesterday, a podcast on Tasty Trade called Jones and Company with Victor Jones. Victor was a guest on our show 2 weeks ago, the show before Mike Farr. Mike Arnold will be the guest this week. But Victor then asked me to do their podcast, so I did it. And they asked me what I thought, and I said, based on what's going on right now, I think we'll see a positive fourth quarter. I think the fourth quarter will show a positive return. It will not get us out of the bear market. We will not end up with a positive year. There's not enough time. But I think that the fourth quarter is going to show a positive return in the S&P. Okay, I don't have a target yet, Coco, because I don't really have a price action breakout that I can measure. Mike may have one. I don't even know. I haven't talked to Mike in a few days because I haven't talked to anybody. But I don't know if we've gotten any sort of official turn, but I believe that the fourth quarter will be positive on equities. I also said that I think then we'll have another downturn mid first quarter next year. And it's likely that the October lows are not the ultimate lows, but the October lows are probably the 2022 lows. They might be. Friday will tell us. Friday will absolutely tell us. If you think of it now, so Friday is the September non-farm payrolls. Then in November, we get the October. Then in December, we get the November, and that's it. Now, I wouldn't suspect that we would see the unemployment rate go, let's say it goes 3.9%. Okay, maybe 4. I don't know what the expectation is. Mike, you might have that. Let's say it goes 3.9% or 4. All right. Is it likely to drop back down to 3.5 or 3.4 by the end of the year? Probably not. It's not likely. So I think we're going to get some relief. And the thing that I really noticed here, by the way, the expectations, I'm sure Mike has shown you guys the CME Fed Watch tool. The expectations are not really moving off the 75 and then 50. There is some momentum for a 25 in December. But that's kind of shifting as well. So you got the same amount of rate hikes that nobody really believed a couple of months ago. When I was saying it, Mike was saying the charts confirm it, right? What we have now is an acceptance that this is what the Fed's going to do. That's what we have. So that changes the dynamic. Now, we saw some capitulation last week toward the end of October or the end of September. And it took the form of some of the meme stock selling, of the cash building up on the sidelines. Blind ETF buying actually to me is a little bit of a sign of capitulation. We saw some of it. I still don't think people understand how bad things can get. Now, I can change my next year's view as we get into next year, but I think the fourth quarter is going to be positive. I covered my crude oil shorts. If you listen to the podcast today, you'll hear, and you guys can believe me or not believe me, that we record on Friday. Mike can vouch that we record on Fridays. I said I think the rumor is that OPEC's going to cut crude oil production by 1 million barrels at least. And when there's a leak, it usually becomes policy for OPEC. And now there's a whisper number of 2 million. So I said that next week I would cover my crude oil shorts. I did it yesterday, covered the crude oil shorts prior to my trailing stop. So now I have no crude oil position. I still don't think crude oil is going to $95 or $100. I don't, because I think the recession is global and is still coming. Now, the U.S., Mike Farr on the podcast said something I thought was brilliant, so we made it the title. If it walks like a duck and quacks like a duck, it's a recession. I thought that was fantastic. I may have misquoted him slightly. He might have said walk like a duck, talk like it. Doesn't matter. But it's going to be an earnings recession. It's going to be a growth recession. It may not be a jobs recession, which means it'll be mild, but doesn't mean that it's not going to be extended. But Europe, the UK, oh my God, they're in a lot of trouble. Okay, our rate of change on inflation fell at least one of the last 2 months. PCE core still high. So you better hope, if you think the Fed is going to pivot, okay, again, pivot's not the right word, it's pause. But if you think the Fed is going to pause on what they're doing, you better hope the non-farm payrolls unemployment component is really high, because PCE beat. And this is what we've been talking about. I've been talking about it. Mike's been saying that the charts agree with it. Cameron Dawson has been talking about it a lot, saying basically core inflation is going to be sticky. And people are going to be surprised by that. And that's why I think that the next push lower is likely to be the first quarter of next year, maybe the mid first quarter of next year. But right now, markets are comfortable with what the Fed is going to do. They believe the Fed, and you can rally in that kind of a fundamental backdrop. And I think we will.
By the way, unemployment is forecast at 3.7.
Okay, that's unchanged.
Yep.
That would surprise me. Honestly, I think it's going to come out higher than that.
That's
My
where it's
prediction is
forecast.
3.8 or 3.9. I don't think it'll reach 4. I'll go with 3.9. I think that's my prediction for that. You know, you have Facebook, Meta closing a New York office, reducing headcount, meaning if somebody leaves, retires, quits, they're not replacing them. There's more and more announcements of job slowdowns, but we're coming from such a strong base in the jobs economy here in the U.S. That it's likely to hold sway for quite a while, that people have money to spend. But man, people don't realize how bad inflation is for economies. I mean, they're all, oh my God, the Fed's pushing us into a recession. Who gives a holy fucking shit about a recession if inflation is bad, man? I'm telling you, inflation is horrendous. It strips you of buying power. I got my electric bill today, $200. When I first moved down here, 98. My electric bill is doubled. And that goes across the board. Now, I retweeted something out today that the EU's energy policy is basically to hope for a mild winter. I hope for them too. Really do. And we're already in a housing recession. I did a Bloomberg quick take on that. It's on Twitter right now. And some idiot responds to me, why are home builders rallying then if we're in a housing recession? Man, when somebody says something like that, I know that they know absolutely nothing. As if home builders can't rally when you've got freaking 10-year yields that have fallen 22 basis points in 2 days. 22 basis points. The yield is now at its lowest point. The 10-year yield is at its lowest point since September 21st. And the 2s10 spread, I had a mark last of 48. Mike, hasn't moved.
The 210s, we will put it up here right now. It's at 46.6.
Okay, I had a negative of 48, but even at 46.6, that's the widest it's been since September 23rd. That's the inflation predictor. As Mike has talked about his research on this, if you don't see that moving positive, We are not likely to be out of the woods. We could be, but we're not likely to be completely out of the woods. So remember that if we rally in the fourth quarter, if the fourth quarter is up 7-8%, okay, we're nowhere near the all-time highs at that level. Nowhere near it. Now, I still think crude oil is probably going to get to that 68, 64, $68 range. One of the things they do on the Jones and Company podcast at the end is they say, give us a prediction, long delta, short delta, and they list a bunch of products, right? Long delta, short delta, where's it going, up or down? That's what they mean by it, right? And I said, end of the fourth quarter, equities will be higher than the start of the fourth quarter, but then I think they'll collapse. Crude oil, I said, I think crude oil is going to range between 75 and 90. I might have said 85, but so let's just say 75 and 90 for the purpose of this conversation. But the larger move is likely to break down. We got to get past this OPEC meeting. And then you're going to see recessionary demand destruction. That's probably going to be like nothing we've seen since the Great Recession, because it's going to be a global recession. And in the EU and the UK, it's going to be horrible. And it's going to drive money into U.S. equities for the fourth quarter until they realize that the U.S. is about to have inflation problems as well, because all these different stimulus packages are for spending money. Idiotic. Anyway.
I mean, did you had more? What didn't you? We have the European producer price index. There's so much. I mean, that's that's still not easing.
No, I'm telling you, man, it is so bad in the EU and the UK that all they can do, honestly, is hope for a mild winter. And then somebody made a comment before I got kicked out, so I don't see the comment anymore. Why did Ukraine blow up their pipeline, or why did Russia blow up their pipeline? So there's an article that came out on Energy Insight today that showed that there's some video footage of unauthorized drones flying around Nord Stream, and now they're flying around the North Sea oil fields. I don't. I mean, you make your own connection. I don't like to make those kinds of connections. But yeah, I think there's going to be non-farm. Will tell you for sure. If we have an odd non-farm number, I'll change my tune. But if non-farm is as expected, or you get a little bit higher unemployment rate, I suspect that will drive the rally. Literally, the Fed speakers are saying the same thing. Mary Daly today said that inflation is going to be a problem for a while. Does that sound like someone who's going to vote for a pivot?
No, that's what I was going to say. The Fed speakers, and I think people misunderstood me, or some people mistook what I was saying, because I was talking the macro sense. I wasn't talking today, but I said I'm going to start watching for the Fed to the speakers to really start, easing up a bit. Shall we say, if they were really going to pause earlier or change their policy drastically. This Fed's been outlining stuff pretty, even though the market doesn't necessarily believe it at times, they've been laying it out pretty consistently. Now, if there's a one-off, no. But if we start seeing a trend of Fed speaker after Fed speaker after Fed speaker hinting that things could be changing, that's something I will pay attention to. So far, I've not seen much of that at all.
Agreed.
They're still, and well, you know what? We were talking. If Sunday I was getting hammered with this, Monday I'm getting hammered with this. Well, we're gonna see the pause or the pivot or everything. They're gonna have to pivot based off Credit Suisse. They're gonna have to pivot based off this. They're gonna have to pivot based off that. They're not. They're not. Right. They would have said if they were at all leaning to change. Is their policy looking through the end of the year? They have 2 more hikes. 2 more. If they were starting to drastically change it, they would have started hinting of it this week. I've seen no signs of that yet.
I totally agree. And, from that perspective, again, when they keep talking about the same things and people are like, pivot, pivot, pivot. Jimmy Iorio tweeted today that, is there anything to the idea that the Fed has doubled mortgage rates, and that's going to slow housing and therefore keep prices elevated? Yes and no. And I tweeted to him that number one, you're correct that home builders, I mean, again, 9 months in a row of negative home builder sentiment. All right. We've got another one coming up in a couple of weeks, another reading of that. But as Dave Collins said in our podcast 3 or 4 weeks ago, starting in 2024, there's going to be a bunch of 3-year, 1-year refis. And then a year after that, year and a half after that, 5-year, 1-year refis. I'm talking about adjustable rate mortgages. And if rates haven't collapsed by then, you're going to have people needing to refinance at double where they were before. And that's when home prices collapse if they haven't already fallen. So, yeah. I mean, yeah, in the short term, new homes are going to start falling off a cliff, but existing supply of existing homes will increase. I check all the time because when we moved down to Florida, I've told you guys this before, we decided to rent for 3 years to see if we wanted to stay. So I've been checking. I decided to stay a year ago. So I've been checking for a while for houses, and it's price increase, price increase, price increase. 3 months ago, price drop, price drop, price drop. That's because the demand isn't there for the existing homes. And people forget, I mean, new homes are great, but the vast majority of homes that sell are existing homes by a wide margin. So be careful. And then I'll throw this into Mohammed El-Arian said this on Bloomberg. People who are looking for a Fed pivot better be careful what they wish for. Because the Fed pivots, that means something in the market, the economy is broken. He goes, and breaks are not what you want. Not with inflation at 6% on the core reading.
No, and besides, a massive emergency thing like they did for COVID, which is first and foremost in still people's minds, generally you start getting the rate cuts. That's not when the market immediately starts rallying.
Yeah.
You generally drop with the rate cuts. Also, the rate cuts generally start steepening the curve again. And by the separate research from steepening the curve, the initial steepening of the curve generally leads to a more substantial equity sell-off. People are still like, let's just go with the pivot term. They're going to pivot and markets are going to the moon. Well, that's not historically accurate.
Look, every media spot I've done, every interview, podcast in the last couple of weeks, I've been trying to tell people, and I told Victor and those guys in their podcast, and they said they were arguing the same thing. Pivot's not the right word. Pivot assumes that you're going to turn around and go the other way, right? And they're not going to go from tightening to easing. So look at it from this perspective. We broke the June lows, okay? And off of the low close on the S&P futures, now over the last 2 days, we've rallied 5.75% off of that low close on the S&P futures, which happened at the end of September, okay, September 30th. Last 2 days, we've been up in the S&P, total of 5.75%. If that continues, which I think it will, okay, we haven't broken the daily rotation zone on my chart on the future side, but if you go from this particular move, all right, and you say, okay, let's say it goes up to the 200, Fed's going to ease? Based on what? Based on what? The stock market rallying? This is kind of Mike's point, and it's Mohammed El-Arian's point too. If the Fed pivots to an easing stance, okay, or even pauses, that likely means stuff has really collapsed, including inflation. And the jobs have really started to stress. The jobs market has started to stress. People can't get jobs because there are none, not because they don't have the skill set. So again, I say be careful what you wish for. Everybody's like, the Fed's going to go too far. Based on what metric? Based on inflation? You're saying they already went too far on inflation? Because why?
It's lagging, Bob. It's lagging. It's lagging, Bob.
Sure. But did inflation peak at 9% and now it's going to go down to 2%? Is that what happened?
It's armchair.
People are saying the Fed went too far because we're going to go into a recession based off of this. But I posit two things. Number one, the Fed doesn't care about recession. It's not in their mandate. And number two, if you don't believe it, Pavneet is on there saying that the Victor Jones podcast was great, and I agree. And he said you should watch that one because it's one.
Bob froze again. We'll get Bob back on in a second. Sorry about that. Again, everybody, big shout out to Gary for the super stickers. Big shout out to Gary. Thank you so much. Everybody, acknowledge Gary in the chat, please. Let's see if Bob is back. Bob, waiting for Bob. Testing. Bob's not back on the first test. We will try it again. And I'll get to other questions I have not been ignoring. It's just we haven't heard from Bob for a while. Still trying to let Bob in. Still trying. Let me try to reset this. Let me try to reset the whole thing. There we go. Let's see. All right. I see your question, Sterling. Again, sorry for the issues. Market looks, well, I'm waiting for Bob. Market looks a little overbought. Time to roll over. There is a potential short-term topping pattern. It has not been triggered yet, and that's very different. I'll give you my key levels. There we go.
Clearly, my internet is still spotty. What's the last thing you guys heard?
Oh boy. I picked up talking.
I don't know. If you guys can remember the last thing I said, I don't even remember.
Well, Sterling's got a question while we're waiting for that. Because you weren't on last week, and I did not have the answer for this, and I actually forgot to research it. Because, see, when you're gone, because the friggin' hurricanes got in the way of everything. Can you tell us what the following means from a tweet I saw on 9/27? Chinese banks set to revive counter-cyclical factor in yuan midpoint fixing formula.
All right. So what that basically means is that they're going to be putting forth policies to weaken the dollar against the yuan. They have the fixing, okay? But just like with the Japanese yen or Japanese bonds, JGBs, the market can push price through the fixing. So one of the things they did do, for example, was they told all Chinese-owned banks, which Chinese don't own all the banks, but they basically direct all the banks. So their public statement was Chinese-owned banks get ready to begin selling dollars and dollar-denominated assets. So it basically meant they're going to intervene to strengthen the yen. And so far it worked. If you go off the high, the August high on the dollar yuan, it's come off 3%, over 3%. So it's worked so far. That's basically what that means. They're going to revise. They're going to use every tool in their toolbox to strengthen the yuan against the dollar because obviously they're a huge commodity purchaser. And having a weak yuan really harms their China 2025 policy and all their other infrastructure that they're doing to support their own economy. Does that make sense?
Yep, that makes sense. See, that's why we need Bob here and not just me with my dry levels.
Yeah, if you guys haven't listened to the Michael podcast, there's a lot in that Michael Farr podcast that makes nothing but sense. He's very good fundamentally, and Michael Farr is the fundamental equivalent of Michael Arnold. Because Michael Farr's thing is, look, everything I do is just boring and consistent. He's the one who says that. So he's the fundamental equivalent of Mike Arnold.
Which is really, a good thing good. Because it's a fantastic thing. Again, if you're flip-flopping all around,
and I'm sorry, obviously the internet is still spotty here, so I'm gonna have to reboot at some point again. But
yeah,
it's best I can do. We just got internet a couple days ago.
Well, yeah, I'm glad you got it back. Mike's going to raise 100 basis points. They're not going to do 100 basis points in November.
No, they're going to do 100 basis points.
There's no way.
In my opinion, it's like, I'm waiting for the Neil Kashkari or somebody like that to come out and say, markets are pricing in as if we're going to turn around and as if inflation's under control. It's not. But that doesn't mean they're going to endlessly raise 75 basis points at every single meeting. They're not going to do that.
No.
They are going to pause. Okay. They are going to pause. But it's probably after 75 to 50 to 75 this next meeting, 25 to 50 in the meeting after that. And then they're going to watch and see what happens over the next 6 months because there is a lag. But again, the Fed, I remember what I was going to say. So Michael Farr knows Jerome Powell personally. And I feel comfortable saying this because it's in the podcast. Okay. And I told Michael, I said, I have this image, this sort of fictional tape that plays in my head over and over again, that in the unusual meeting between Treasury Secretary Janet Yellen, President of the United States Joe Biden, and President of U.S. Federal Reserve Jay Powell that happened a few months back, that they basically just looked at Jerome Powell and said, we thought it would be appropriate to let you know we're blaming inflation on you. And I told Michael Farr that, and he just kind of smiled and he goes, well, I haven't talked to Jay about that, but I will tell you this about Jay Powell, and I've been telling people this for a long time, and I'm not going to give you the full explanation because you got to watch the podcast. He said, I've known Jay Powell for 30 years, and when Jay Powell says he's going to walk through a brick wall, we all say, whatever, you're not going to walk through the brick wall, and then you turn around and he's walking through the brick wall. Okay, if he says he's going to do something, as emphatically as he has said he's going to fight inflation, he does it. Recession be damned. So everybody's on Twitter and everywhere else, and my good friend Jim Iorio has fallen victim to this, where they think this particular Fed is afraid of a recession. They're not. They're afraid of failing at inflation, at the fight against inflation. That's what they're afraid of. And I think Jerome Powell thinks this is his legacy. That's why he keeps bringing up Volcker. Everybody thought Volcker was nuts, and they hated him when he was doing what he was doing because of the volatility and the turmoil, and you could blame the 87 crash on him if you want to. But I'm telling you, I believe Powell until he says something different. I truly, truly do.
And there is no mandate to avoid recession. It's price stability, which they already sort of blew on one side. I doubt they're going to try to blow it on the other side.
That's again, Mike, when people say the Fed's going too far, based on what? That they're going to cause a recession? They don't care. That's not too far. It's not too far. If you go into a Thai restaurant and order spicy, it's your fault. Your fault what happens for the next 48 hours. Not the restaurant's fault. They're doing what they're supposed to do when you order spicy.
I ordered extra spicy. Trust me.
I ordered mild, and I was crapping comets out my rear end for 2 days. I was dying. I'm in the bathroom screaming at the top of my lungs, and Kristen keeps coming in. What's wrong? I'm like, same damn thing that I said a half an hour ago is wrong. I'm dying in here. Call the ambulance.
Oh, see, there you go. So, see, and the live stream gets better and better. So, yeah, it's not, and I have the Fed Watch tool up here, and it's still, whether you're talking pivot or pause, the market, I mean, and this is based off, what's the Fed Watch tool based off, Bob? It's based off of not what people think. It's based off of
where the markets are priced. So Fed funds, SOFR, and Eurodollar futures.
Which means you're sort of putting your money where your mouth is. Is that correct?
Yep, that's exactly
where people can say anything.
Yeah.
This is actually derived not from what people say, but where the money is going.
Yep.
So right now, I don't see anything other than a potential 50 or 75 basis point
Mm-hmm.
on the radar screen. I don't see a zero. I don't see a 25 basis point. I don't see a 100 basis point. And they've also been stressing this, that they continue to stress it even today. Also, they've talked about we could see inflation up to 4. They've reiterated this over the last couple of days, have they not? That we could see, not inflation, we could see unemployment
Yeah.
in the fours, in the mid fours, and it's not going to shock them.
Yeah.
So I
Yeah.
don't know.
It's funny because God, I lost my damn train of thought again. But just from a perspective of what people are thinking, the market can rally in the face of these things. It can. And that's why I think, again, Mike, I don't think you've mentioned having a signal that things are going higher. You might have a
We
percentage
got the
here.
close over to 62.5, which is the short
Okay.
term. It's a now following, trailing up on a short term buy signal.
Okay. So I basically came to this conclusion without talking to Mike. I haven't had the ability to talk to Mike. But from a perspective of what the Fed says they're going to do, when you hear people, I'd like you to go out there like a freaking informed army. When you see people saying the Fed's going too far, you got to tell them if you're basing it on recession, that's not their metric. So if you say the Fed's going too far because they're going to cause a recession, I mean, that's like saying I'm going on a 100-mile run and I've reached 50 and I've gone too far. No, I haven't. So I'm going on 100. Sterling, I've lost 18 pounds in the past 45 days or so.
What's your secret, Bob?
75 hard. My wife wanted to do it. I didn't want to do it. Have you heard of this?
No.
Okay, so there's nothing to buy. It's just a thing called 75 hard. It's a challenge, I guess. Basically, it's 75 straight days of you pick a meal plan, doesn't matter what it is, paleo, keto, whole 30, low fat, doesn't matter. You pick a meal plan, no cheat days, no alcohol, 2 45-minute workouts a day. One has to be outside. So, Mike, when I sent you the video of Kristen and I walking in the hurricane, we were doing our outside workout. That's why we went out there. So 2 45-minute workouts a day, a gallon of water a day. This is my last bottle to make my gallon for today. And you have to read 10 pages of a nonfiction book. So far, I have read The Hunter-Gatherer's Guide to the 21st Century by Brett Weinstein and his wife, Heather Hane. I don't know if I'm saying her name correctly. I've read Living with a Seal. I forget who wrote that. And now I'm reading Can't Hurt Me by David Goggins. I'm about halfway through that. So.
Well,
Yeah,
so
down 18 pounds.
so how long has it been since you've had a drink?
Today is day 43.
Ah.
Probably why I'm so agitated.
Well,
it's funny. My wife and I said if we lose power, we're having a damn drink. And we didn't lose power in the hurricane. We lost for 8 minutes.
So, it's how much could you drink during 8 minutes? Quick!
Literally, we were reaching for the shaker. And all of a sudden, the power goes back on. It's like, God damn it.
Well, I haven't had a drink since slightly after July 4th.
Nice. Feeling better?
Oh, yeah. I'm doing quite
It does
well.
make you feel good.
I'm doing
Thanks for that, Jake. Fort Myers is a mess.
Yeah, Fort Myers
I'm
got
glad your wife's not there anymore.
absolutely obliterated.
I gotta go. I'm gonna go on the best adult dating site.
Yeah, that's going to get blocked soon. I'm doing some interesting things. I've also been tracking, I'm wearing a glucose tracker.
Nice.
And I've been tracking, my glucose response. And it's not for diabetes or anything else. It's actually to see what affects different food and different eating windows and different everything has on my glucose response, which has been quite fascinating. So I've been doing that.
See, Mike is not just like this with markets. When you guys are like, does Mike really trade like this? Mike lives like this. Doesn't just trade like it.
Look, I'm scanning my stuff to go. I log my meals. I'm doing the whole thing. I'm like, I come up with the harmonic levels for my eating windows.
By the way, my brother's going to be mad at me for telling you this, but he said you get crabby when you don't feel well. He goes, "You're going to be back on a day or so?" I said, "I'll probably be back on Tuesday." He's like, "Good." Mike gets crabby when he doesn't feel well. So he's been on. I don't know if he's on here today. He's not talking if he is. So
It's not. It's you know what? I've been very crabby recently because I've hit my limit with sheer stupidity.
yeah,
I've literally hit my. It takes me a while, and I can deal with it for a very long time. But the amount of sheer stupidity,
yeah,
and it's with a lot of different things. It's like I was having a conversation this weekend with people, and these are people that are supposed to be smart. At least they think they're smart. And we got into an argument, and it was like, oh, well, they say, well, see, inflation's coming down. So it was all about the Fed and everything else, and inflation's coming down. That means prices are dropping. I said,
nope,
no. Inflation coming down, yes, you can get a deflationary component, which could affect some prices. But if inflation goes to zero, let's just take that. It means that prices have stopped rising. It
right,
doesn't mean that and they're like, no, it means prices are coming down. I said, you're making the same mistake that people make when they're talking about, well, the deficit is coming down. That's better for the country. It's like we're reducing our debt. No, the deficit
treading that
coming
money.
down still increases the debt. It until you get the deficit positive, which is a surplus, then you're decreasing the debt. Now, so inflation coming down just means the rate of increase is not as much. It does not mean we are deflation. Now, some things could be in deflation as a component of that, but it drives me friggin' crazy. Sterling intermittent fasting. I do intermittent. I have a 4 to 5 hour eating window every day. So yes, I love intermittent fasting. It actually has. That's one of the reasons I'm doing it. Sorry to go off the rails, but and if you ever wanted to do something, putting on a glucose tracker, and if anybody wants to reach out to me personally for more information, is fascinating. It's literally fascinating. I'm sorry to derail it from the markets, but I am a scientific numbers guy, period. And to see something and then be able to assess is really interesting.
So this is so, Mike. What you were just ranting about is very important for people to understand. And when people are like, "Well, inflation's been coming off," I've had these same conversations. A couple of them when nobody had power and we were kind of getting together. People were coming over here because we had power, and this whole thing about inflation. Well, prices are finally starting to moderate. The increase in prices is starting to moderate. As I just mentioned, a good example: my electric bill. Okay, it's doubled. It may have been up 125% if prices hadn't moderated a little bit, but instead it just doubled. So, what you're seeing when you see inflation figures is the increase in prices. So, if last month it was 9% and this month it's 8%, prices haven't fallen. They've risen by 1% less than they did last month, but they've still risen. So, and these are things that, like, words matter. People will say words matter. I hear this phrase all the time: words matter, but they don't matter when all of a sudden it's something that actually matters to a person's life. And it's like when you have these kinds of conversations, people like prices are finally starting to come down. No, they're not. They're just not increasing at the rate they were before. Now, can individual things come down? Sure. Gas came down. Sure. Okay. It came down from where it was. Gas came down from $5.05 national average to about $3.65 national average, which is $1.50 higher than it was a year ago and almost $2 higher than it was in 2018. And that doesn't help people. Okay, sure, it helps people versus 505. But this is why I keep pointing to next quarter now, because people will feel it in their actual wallets next quarter when they're not just elated about what's going on, how things are not rising as fast as they were. And it's like politics, man. It's like when they raise your taxes and then your taxes are up for a couple of years, you get used to it and then you stop complaining about it. And this is a similar type of dynamic that's going on right now.
George with the super chat. This is music to my ears. It's not much, but it's the only channel I financially support. Keep up the good work.
I don't know if you thank Geo and Parvit, they did it, or
Yes,
Pavnit. Yeah,
we've
okay.
got. Yeah, we had. Just to reiterate, I thanked. We had Gary with the super sticker earlier. Again, we've
Mhm.
had a few people. This is why we do the channel.
Gary, congratulations on that 8 years, by the way. That's hard to do.
Where was 8 years? That's very good. Yeah, that is a big shout
Mm.
out to Gary.
That's
Also,
impressive.
Pat Panvit, Bob, what are the potential triggers this quarter to make a new low below the weekly 200 on the spider or completely shatter the Nasdaq buyers? So what's the counter?
Well, the counter is that jobs have not actually suffered. That will counter it. Okay. So, for example, if we get, let's say instead of 3.7, we get 3.6 on unemployment or 3.5, and the labor force participation rate stays the same. Okay. Let's say that all of a sudden, that would be the main one because here's so I did a quick take for Bloomberg where they asked me about the housing market recession. And they said, where does it leave the Fed now that the housing market is in a recession? So the first thing I had to do in order to craft that 1 minute Twitter clip was to explain the basis for the housing market being in a recession. So that's why, right off the top of my head, I know that we have 9 months consecutive of negative builder sentiment. The worst one and the first one being right around the first Fed rate hike. Okay, that was the worst home builder sentiment. It was also the first of this negative streak I'm referring to. But we also have falling Case-Shiller home prices. We have shrinking new home sales. We have shrinking existing home sales, and we have a doubling of the mortgage rate. But the Fed doesn't care about that. Okay, what they've said over and over again is they need to see the job market abate a little bit. There's been some academic research out there done that says you're going to need a 6% unemployment rate to actually affect inflation and get it back close to 2%. So, what can break this? The market has become comfortable with what the CME Fed watch tool is pricing in. But if you look at those CME Fed watch tools, you can look at it yourself. Okay. None of that stuff is up above 80% probability. Um, I think the highest probability, I think, is the 75 for the next meeting, I think. And it's at 68, somewhere around there. That means we're still very uncertain about what's going to happen. So let's say we get a 3.6 or a 3.5% unemployment. If we get a bang up jobs number, Mike, you don't have to pull it up. I'll look it up as I'm talking about it. If we get a jobs number that's say somewhere in the range of, let's see, the market is expecting. Let me just jump into it really quick. Tomorrow, I guess, would be composites.
I'll bring it up anyways while you're doing it.
Yeah, the market's expecting 250,000 jobs to be added. What if it's 565? Or hell, what if it's 400 new jobs added? That's the kind of stuff, Pavneet, that'll cause that. Okay, is jobs actually getting stronger? The fact that the JOLTS job numbers that there's fewer openings could theoretically be because some of the jobs got filled.
Mm-hmm.
People don't think about that. The jobs have been taken off the posting because they're getting filled. That could be happening. I'm not the one saying it's happening. I'm just saying that could be happening. So that's what would likely break the market from this little rally. And that's why I say I think we'll have a positive fourth quarter, but ask me again after non-farm payrolls. Now I'll come on the live stream after non-farm payrolls Friday.
I have a question for you, Bob.
Yeah.
Oh, we're going into Q3 earnings. What are any effect from those?
Well, the preview's been shit, right? I mean, Tesla, Nike, Blue Apron, all garbage. And the stocks reflected that. So I would say it's going to be disappointing, but it's part of the reason, and I said this on the Tasty Trades podcast, part of the reason I think it'll happen in the first quarter of next year, maybe even the second quarter of next year, is we have now gotten a bunch of downgrades on earnings. Some people whose opinions I respect tremendously, like Cameron Dawson, say it hasn't quite reached where it should be because the earnings estimate now are pricing in sort of a 16, 17 P for the S&P, and it needs to be closer to about a 15 for it to be like a capitulation event, or for it to be
Oh,
fairly priced. I'm sorry, for it to be fairly priced.
by the way, I want to clarify something since you brought up capitulation again. When you
Yeah.
were talking about you thought there was capitulation last week, because I have an official set of metrics for capitulation results. On my set of metrics, we did not hit any capitulation. I just want to
Okay. That's
clarify
fair.
that. Bob's thoughts on there might be some aspect of capitulation were not officially a capitulation signal that I
No,
track.
no, they weren't. And honestly, I couldn't tell you why. A couple of weeks ago, I said, feels like this rally can go for a little while. And it did. It was just a feel. I couldn't really point to anything. But then in the podcast, I shorted the S&P. So
Did you have a yen trade?
no, I had a Euro trade, but it didn't trigger. The Euro trade was the stop in.
Oh,
I
by the way,
wanted to do yen. I actually reached out to you personally, Mike, and I said, could you look at a yen chart for me? And then I didn't want to do the trade.
yeah, because I didn't know. I thought they might have been referring to something. I didn't have time to listen yesterday to the podcast. By the way, with the dollar pulling back, the yen sure is basing right at the highs.
It's not really moved much, has it?
No, so this is very interesting because we're finally getting the dollar going to reconnect with the weekly rotation zone. But we had the yen intervention day back on the 22nd, and now this can't be making the Bank of Japan feel very
Oh,
comfortable.
we've talked about that for so many years, Mike, how the Bank of Japan has a history of doing things going against the market, and it just doesn't work.
So yeah,
They don't read their own history, obviously.
Paul, you must have come in late. You got Bob expects the markets to rally
Right.
through the end of the year. I'm in short-term rally mode. Just let me touch on a couple other things because on a weekly basis, let me touch on this for people wanting to know. Remember, we talked on Friday about yes, if we were going to get the reversal off the 200 and the reversal of the Nasdaq from below the 200, it would probably happen this week, and it has so far. There would be a weekly modified percent B buy signal here. The last one we had preceded this was triggered in June, which we now past specific one-off results are not. That does not mean we're going to go up 20%. I have to caveat that because people are like, well, the last one went this. Well, so we could, on a weekly close above last week's high, get a buy signal, a weekly buy signal, which would also signal a potential continued rally. Is it guaranteed? No. We could get a topping pattern in before that. We could rally for a couple weeks and get a major top pattern. That's why you trail stops also.
Mm-hmm.
You don't just go, I'm going to buy and go to sleep till January 2nd. In these markets, I don't at least. Do you, Bob?
No, but here's a market I like.
Gold.
Yeah. I keep a few of these at my desk, and I said that in the podcast too, in Victor's podcast. I said I also have guns. So for anyone who knows the general area where I live, be careful if you're coming for these. I like the gold market right now because I think the US is going into a recession. While gold has not really been a good inflation hedge over the years, it has been a good recessionary option because the Fed is usually cutting rates. So the dollar becomes more abundant. But you got to get into the rate cut cycle, which we're not in yet. So that's why gold has suffered despite the twos, tens inversion.
So golden guns.
Golden guns. That's what I like right now.
Yeah, I just got a couple new SIGs.
Nice. You gotta send me
I
pictures when you have time.
I got a nice little 320 with the red dot on it, and I got the recently released 365 Macro X, released back
That I
in
like. What are you going to do with the 320? Shoot squirrels? Come on.
the three. No, I'm talking the model. It's not a caliber. It's a nine.
No,
Those are
I
both
thought it
nines.
was, I thought
Because
it was a 30.
I've had my abundance of 45s and 40s. Uh,
Yeah.
so now I'm picking up because that Macro X, that 365 Macro X is fantastic for concealed carry, especially you slap a little uh, red dot on it. Oof.
Yeah, I got to get a Florida concealed carry. It doesn't carry over. But Gary's right, by the way, Gary, in his last comment, Gary Baker, and something I mentioned earlier. The spending that all the administrations are doing to try and stay in office during a recession pushes inflation higher. So people are going to be very surprised how bad it gets.
Oh yeah, it's
Look at Jacob.
gun glucose monitors and gains. I love this channel. Every need the red dot as your eyes age. See, otherwise range time is frustrating. I think we've
I
started.
actually like. I've got a Walther PPQ 45, and it's just getting harder and harder to shoot because even though it's not technically a hand cannon, it feels like a hand cannon. The older I get, and the lighter I get, so I can take my arm off.
Oh yeah, those red dots. I'm loving those red dots. Oh,
Yeah.
the
All right,
problem
guys,
is I
I
got
got
to
to
change
run.
out some slides on my older guns. Oh, so
I got to run, guys.
we've talked about a lot of different things. So thank you for being on. You'll be. Are you coming back on Thursday?
Yep, I'll be here on
And
Thursday.
then non-farm payroll. You can peek in
I will
afterwards.
come in for after non-farm payroll tomorrow. If anybody's watching Yahoo Finance, I'll be on sometime after 11 o'clock Eastern time on Yahoo
All
Finance.
right. Okay. Well, thank you
All
so
right.
much for joining us. Glad to see you're all well, and we will talk to you in a couple days unless we see you on Yahoo Finance tomorrow.
All right, guys.
All
Talk to you
right.
later.
Hey, everyone. Now let's see if we get some of the. I guess we could get some snowflakes unsubscribed, but I don't even care anymore. Because we've brought in intermittent fasting, firearms. Oh boy, it's going. This channel has gone off the rails. I'm so giddy. Tell me more about the S&P buy signal and interaction with the 62 and a half. You're liking the S&P buy its potential? Is this still a bear market? Yes. You got to get your. Okay, I'm going to keep talking about stuff. And then I'm just going to call it a day. Was this still a bear market? Let me get back to if I get a long term signal based off stuff I can't release, I will let you know. If the one based off of stuff, okay, based off another medium to long term signal, your earliest is above 4,100, and I need a weekly close. We're still a ways off, and that would be for a continued potential rally. Are we anywhere close to that yet? No. Do you have a potential buy signal? The last one triggered June 21st on this key close. Could we get another one here with weekly cycles at the bottom and then get a multi-week follow through? Yes. Is that to new highs? No. It is a counter trend bounce signal. Also, There were tons of algo stuff already set to run. Had to see because I talked to a few people, but wanted to see how it played out with the algos. Remember, some of the stuff becomes self-fulfilling. That's why the 200 simple is on the charts because it's tested out and now you have so many algos programmed to it. So, do we have to close above last week's high? No. It's a potential still. Did we get daily signals? Yes. I'm going to walk through. Initially, and then I'm going to call it a day so you don't get crabby, Mike. We had a little rebound. We had a sideways. Then we had a breakout with momentum. All right. Then we had the time I started live streaming and we started talking about the higher prices. Then we got the close above the 62.5, which foretold continued higher prices. Remember? I will walk everybody through. And I'm really trying to be patient with everything because I'm trying to teach people. So I really appreciate the super chats. It makes this even more worthwhile. We got the close above the 62.5 from this area. What's the next targets? 80 to 100. We've exceeded that. What do I do? This is how you keep rolling it forward. Where's the next pausing area? The next minor pausing area, I talked about this even before we started on this move. I showed how to ratchet it up. Where are we now? What was the next target? 37.99.50. What did we just close above? 3,800. What does that mean to me? Let me call up the weekly also. We've got to the other side of the daily. I start watching for the weekly. Look at the weekly rotation zone. 38.65 to 39.87. What's in the middle? The 87.5 to 100. We just closed. I believe that's officially right now. Yeah. I had to double check the time. 38.03. That's a close above 37.99. What are the probabilities put in a favor? 38.90 to 39.36, somewhere in that area. Major breakdown zone on a weekly right between that area. In between the weekly rotation zone. This is so. Does that mean you can't get a double top? Well, this is a potential double top. Oh, but we closed above 62.5. Yeah, but you can still trade back. Could we theoretically trade back? This is, by the way, is not confirmed or triggered yet. Theoretically, could we trade back to 37.30 without changing much? Yes. If you want something you can fall away at home, if you don't have another system, if you don't have something else, you want to know where it gets dicey at this point to retest the lows, let me just show you. And this is going to keep ratcheting up. You get the close below the 62.5 on a daily basis. That's back at 36.60. Could you theoretically trigger it as double? Return to 37.30 and then keep marching back up to that weekly rotation zone? Yes. You get the close below 36.60 at this point. Now we open again in 20 minutes and make higher highs. That number's going to ratchet up. But this is your warning sign, okay? That's the easy warning sign. You can follow along at home. But I want to know ahead of time. Well, we have a prior signal. And that could be, look, if you're trying to capture some of this move and then say, well, I want to lock in some gains. Hey, we triggered this little mini double top. Lock in some gains. Watch for a re-entry signal going back long. Just because you get this little thing, you lock in your gains. Would you lock in all the gains? I wouldn't, because we can still see higher prices, especially if we trigger a weekly buy signal. But you now have a key line in the sand. And that's just based off of simple. You can do that in even 1 minute. Yes, you can get other topping patterns before that. But do we have, besides this little mini double top, do we have another major topping pattern? No. We also have some waning momentum, so we could have a sideways correction without ever triggering this. Everybody wants to know the future. The thing is, you have to put the probabilities in your favor. And is that a guarantee? No. Bob came on and said he expects a rally, and I saw people cheering, yay. Does that mean that could change in 2 weeks? It could. We're still in a tactical trading market. Could Bob come in on 2 weeks from now and say, guys, that rally's probably over? Yeah. You got to trade the numbers still. It's why what I do is boring. People would rather hear, they want to hear the news events. They want to hear the market juice. They want to hear this, that, the other stuff. I don't care about the levels, but the levels are what's going to make you money. The other stuff's entertainment. Bob thinks you rallied through the year end. What probability is that? I don't know. I think, especially if we trigger a weekly, right now it's trailing mode in the short term. Could we trigger a weekly signal? Yeah, a weekly signal. Is that a guaranteed for new hikes? No. It's not even a guaranteed for a continued rally. You could get a reversal. But it puts more probabilities in your favor that the rally will continue. Just like we rallied it from the mid-June, and then you got the buy signal. Remember also, why do you track this stuff? Because let me show you again, just for newer people. I'm really trying to make this simple and help people. Pullback. You didn't get, so on a weekly, I need a longer term close if it's a weekly signal, not just a dip below the 62.5, but a key close below it. Pullback, pullback, pullback. 3 weeks of things brought into question, then it rallied. But it never invalidated it. So can you get still markets to go sideways for a bit? Is it guaranteed that every week's going to be a green week going into year end? No. It's not even guaranteed that next week's going to be a green week. Nothing is guaranteed. You have probabilities. That's what I'm trying to get through people's heads. And it doesn't matter, again, what I think. It matters. It doesn't matter what Bob thinks. It matters what the probabilities are. And even when you have 80 or 90% probabilities in your favor, is there a 10% chance that the other thing could happen? Yes. It's why we trade with stops. It's also why you go into a trade accepting the potential loss. Therefore, you should define your potential loss going into a trade. This is the stuff that people, he's talking about this stuff again. Oh, that's not as much fun as talking about all the other stuff we talk about on this channel, but that's what makes you money. I'm going to start a series I decided today. And it's going to be, besides banning people, oh, great. Thank you, God. Sterling. Speak of the devil. By the way, besides banning just inane, asinine comments, because I'm just done with it. I'm just done with it. I'm also going to tell people, you know what, a lot of people, and I'm not picking on anybody particular, and there's people who will watch 1 or 2 videos. I'm going to start a little series of, you know what, why most traders who will even tune in this channel will lose. Why? Because they're focused on completely the wrong thing. And it's going to be brutally honest. Because I don't care if people unsubscribe. As I told you, what I make this channel, if you think it makes money, that's why I appreciate the super chats. At least that helps. But even like last month with super chats was 191 whopping dollars. Look, I've been on this with Bob. We've taken our time. We've been on this for closing in on an hour, 10 minutes. If you don't, I could make more working an hour, 10 minutes at Chick-fil-A, as I said. I do this to try to help people. So, do we have a potential top? Yes. Has it verified? No. Has it triggered? No. Does that mean the rally's over? No, it's a pullback move. It's even a pullback move only into the 4-hour rotation zone. Do I have any sign that we are at an all-time bottom or going to new highs? No. So far, this is a bear market rally. Everybody's worrying about calling the low instead of calling a trade. People aren't really focused in the trades. People are focused on, they just want to come on here and say every friggin' move, we only go up. We only go up. You don't only go up. But look, how many people, I know people following the financial media. I've been tracking it. This was a low. The lows were in. The lows were in. Oh, this is definitely the lows were in. Nope. The lows were in. Nope. Remember, I know everybody can remember from middle of June, beginning of July. The lows, how much? The lows were in. The lows were in. Weren't they in? They were in. Nope. We have a low. Okay? Probabilities don't have the significant low in. Could things change? Yes, but they have not changed at this point. Thank you. And by the way, did somebody? I wasn't even reading some of the comments this morning. Did Tom Because I went to his channel, which is absolute. And I don't like to insult something, but for somebody who supposedly, by the way, I don't know if you're making 500,000 or half a million a year and you never have a losing month, why you're bothering coming on another person's channel. Make your own channel. First off, I can understand people who, hey, make a lot of money. There's a lot of YouTubers and there's a lot of traders that put out videos that make a lot of money. So it's nothing about the money. You know what? I don't do this for the money. I do it because I have the means to do it. I do like the money to come in to help support it because I hate to do losing ventures. What I'm saying is I don't go around trolling other people's channels. I don't have the time to do that. And if you're that successful, and by the way, if anybody says they've never had a losing month, they've traded for more than a little period, they are full of crap. Because there could be market conditions that aren't suitable for anything. Even stuff I follow, which has very decent expectancy and very decent returns, can get chopped in a month time. So anybody who says they've never had a losing month is full of crap. Even outstanding investors have had doesn't have to be a big losing month, but it could be a losing month. I mean, it could be down 0.1%, but that's technically a losing month. So don't and if anybody comes out and says, there's no losses or that, well, they're just blowing smoke up your butt. All right, so that's where this channel stands now, and I appreciate everybody who supports with the super chat. Because don't think that that's where the support comes from. And I'm trying to keep this free for as many people as possible. And as you've seen, look at the Tesla. I'll get to some other stuff in a second. And you don't believe the stuff? I put this stuff out ahead of time. I've seen so many channels that put out wishy-washy, utter sheer crap. It could do this, could do this. I put out these key things ahead of time. I've talked about gap harmonics. Look at this on Tesla. Here's your friggin' gap harmonics. What did I say? At least 15-minute close above the 62.5. You didn't even get a 5-minute close above it, let alone a 15-minute. And look what happened. Oh, but the Twitter announcement, fine, but you got to follow the numbers. You got to follow the numbers. Boom, boom. No close. Could it still happen? Yeah, but you get the trigger. I put this stuff out at a time. And to the people that you know who you are contacting me, go put your own stuff out ahead of time before you sit and try to blow smoke up everybody's ass. Funny thing is, you do the gap harmonic. Look at, then you can do the gap harmonics the other way. Close below the 62 and a half. Targets a gap fill. Gap fill. Put the stuff out. If you know what? Does that mean it's always right? No. That's why we talk in terms of probabilities and trade expectancy. Thinking about probabilities has helped me the most. I'm glad it has. You got to get your head around this. You trade the probabilities, not the. There are no guarantees in anything in life, especially in the markets. And I'm glad for the people who want to learn. And I'm glad for even the people like George. George, a $5 geo mission, $5 super. If that's all he has to put into the channel, then that's something because it means he's contributing to learning and contributing to the channel. But at least you're not putting in stupid comments. Warren, God, I hope you. There'll be plenty of buying opportunities. Trust me. Tom, if you're trying to help out, coming in to say every day markets only go up is actually just an ignorant, uninformed statement because they don't only go up. And that's actually not helping anybody. That's why I've stopped responding to you, and I'm going to put that. Okay? So if you want to be a member of this channel, and contribute, and I'm not saying you don't have anything valuable potentially to contribute, but that's not a contribution. Just like anybody who says markets are going to go to zero, that's not a contribution. My 401k is parked in bonds. I'm looking for a decent long-term time to buy. There will be. Again, we're still in tactical trading. And there'll be times. And are you going to... Look, there were buy signals that triggered intraday. There was a Russell signal that triggered end of day. There'll be buying opportunities on pullbacks. There'll be buying opportunities on bigger pullbacks. There'll be shorting opportunities on rallies. There'll be opportunities. And one of the things that's in the most traders will go broke series, and I'll give you a little preview. Too many people are focused on entries, and that's not the most important thing. I know people who got in here. They got out when it closed below here. They rode it up. They rode it down. They got out closing below these lows. Oops. Because they were worried about their entries only. Entries, again, as I've said, you can have a trade trigger and no entry. Why? Because you don't have proper reward to risk that gives you a positive trade expectancy. So you can have an entry or a trigger that's not an entry. That's why most people just go broke. Or they'll go find the next thing. Oh, well, I lost money trading. They'll blame it on like the system or the channel. And it's actually because they didn't put the trade expectancy in their favor. And they're always chasing stuff. They're always chasing the next friggin' entry. The entry, you're focused on the wrong things. You know what? The boring things will make you money. And most people would, that's why they're going to say, oh, I bought the low, or even when they didn't, or I did this, because they're more worried about thinking that if the market goes in their direction, it's about being right versus about making money. There's two very different things. They're very different things. The ego wants to be right. The ego is actually the trader's worst enemy. The ego is not about making money. The ego is about being right. And you can be right all year long. I know plenty of people who, oh, I'm right all the time. But well, how's your trading account? Oh, I stopped trading. Why? I thought you were right all the time. No answer. Why do you think they stopped trading? I'll look at one more thing. You want to look at an energy stock, CF. Again, being right is not about making money. And every trade signal is not about, every trade signal is not an entry. Here's your, you want to look, we want to look at CF. I'd just be riding it with a trailing stop. Your next key area you want the close above is at least above 108.59. Coming off the 200. Other than that, if you're in a long already trailing position, that's fine. This was the close right at the entry, by the way. Other than that, it's just a trail. Your key trailing level at this point, which I would ratchet up if you're trying to stay in it longer, right? This is just a counter trend move in oil, not a long-term bottom just yet. So I'd be ratcheting your stop. Minimum for me would be on a closing basis below 95.94. I would not want to see, not just because of the harmonic, because you're actually breaking down below some pretty key already tested area. And that would be the lowest close even from this pullback, and it would be the harmonic. Other than that, I'd be trailing out. Your next targets, again, sorry for being so boring, but here's how you're going to do it. Besides using besides using the reverse, so you can do this yourself. Look at this. I couldn't have even made this up if I tried. What's 108.59 red line? 12.5%. Coming from this low to this bar, you know that's the reverse harmonics. There's your next key target. You close just above the 50 right now. So unless you get a reversal stop signal, even if you got a pause or sideways or a little pullback move, my next key target would be 108.59. You get a close above that, 110.63. I definitely use as a stop raise. The next minor would be 112.26, which I would not ignore because of this gap area. And then you have 115.93 if the major rally continues. But the key area first is this 108.59. See how we have a roadmap now? If you wanted a tighter stop, the tightest stop I would legitimately use, you have a significant level, I can tell you right around here. You have key significance. So I'd have my stop not at that level, and that level is 121. I'd have my stop actually slightly below 100 on a closing basis if you wanted a tighter stop. That's how we do our analysis. Now, cycles are at a top, so I'd be moving up a stop. Weekly cycles are still at a bottom. So could you see a pause or a slight pullback move? Yes. But until the rally can really continue, you need that close above 108.59. William, you're about to get banned. I have a very short fuse right now, so I'd recommend not pushing me. I can only speak for myself in this, but every time I'm very excited or very anxious, it's because I'm size too big in the trade. Yes. And trading should be boring. Position sizing is key. And if you're anxious or scared, it's generally a sign you're too big, and you should keep your risk consistent with your trade expectancy. Your trade size can vary based off your systems, which is an advanced concept, but it's really based off your trade expectancy of your systems. But you shouldn't go very, like, let's just say you have one system with a positive trade expectancy, and let's just go, it's got decent probabilities. How do you know when to vary your size? Based off of one, let's say you only have one entry method. One. How do you know which one's going to work out and which ones you don't? If you did, it would be built into the system. So the people who vary their size, and I'm only talking about one system, based off of one systematic entry, they can end up costing themselves money. Why? Because if they up their size on the one that's the loser and then lower their size on the one that's the winner, they just have outsized losses compared to their trade expectancy and undersized gains. Another preview. There you go. Another fantastic preview. Why most people trading go broke. I'm asked some stupid questions, but F made a comment last other week saying the cost would be much higher, 1.2 make items, than a different statement today to rally. Again, there's multiple reasons. Stocks can go down, stocks can go up. You're only looking at part of the equation. All right? It's why you're never going to know enough information. It's even if you think you know all the information, you don't know all the information. Why do I have to look at things from a technical perspective? Because I'm never going to know all the information, and I'm never going to figure out if a comment's bullish or bearish. I've seen completely what I thought was bearish stuff, and a stock takes off. I've seen what I thought, hey, that's a slam dunk bullish. The stock sells off. You're never going to know enough. Did you miss the Tesla review? Well, here's the one thing I didn't do. I just looked at the harmonics. By the way, that's 62.5% from Tesla. And again, give everybody a shout out to the people who did the super chats. Include Gary did 2 of them, by the way. Give everybody a shout out in here. So your key look at. All right, 2 things. At least we fill the downside gap. What's the bullish play? What do we have here? Yes, this is still technically a double bottom. Still technically. Here's your conservative targets because you already broke down below key levels. What's your gap fill? Harmonics 256.35. That's still your key level for the gap fill harmonics. And right above that, 257.34 is a trigger for a potential double. Look at where your target is for the double. Virtually the gap fill. That's your first target. There's your bull case. Would that contradict, meaning, because we closed below 62 and a half, this is baked in? No. It would be a counter trend rally at this point back to the major breakdown zone. Look on the daily. Major breakdown zone, daily rotation zone. Play into that, boom, roll over again. Do either of those have to trigger? No, they don't. Probabilities are still that you're going to see the at least 220.33. Boring analysis. There you go. Thank you, Ted. All right, don't trade anything with emotion. You have to separate your trades from what you think should happen or what you want to happen or anything else. Otherwise, you'll be emotionally invested in the trade, and then you're not going to look at it clearly. You know my thoughts long term. My fundamental thoughts, I've stated those repeatedly. What's the trade, though? Well, you're welcome, Christoph. Elon, if it actually goes through this time, will have to sell some more shares unless it's going to be completely funded. He's already sold a fair amount, unless there's already funding lined up. We can talk about more of that with the Elon pivot at some other point. This has gone on an hour and a half. An hour and a half. So there we go. I will be back tomorrow morning. I hope everyone has a wonderful evening. Thank you for sticking around, so many people. Thank you for reporting the crap chat. Thank you, Sterling, for moderating. Thank you again. I'm going to give one more shout out to everybody, and I hope some more people do consider with the super chats, but let's go back through it. I want to acknowledge everyone again. Where do we say? I got to scroll up. I know we had Panvit. Let me put them on the screen. Panvit with the super chat. Thank you again so much. George Geo Mission, thank you for the super chat. And then we have two. Let me get all the way up. That's how many comments we've had. Two with Gary. Gary, number one, thank you. Gary, number two, thank you. Gary learned probabilities from this channel and starting to think like that. So, huge shout out to everyone. Again, thank you. Take care, Josh. Thank you, Ted. Elon could do that again. Remember, the letter he sent is all contingent on funding again. They're not going to just dismiss the law. They're not going to walk away from the lawsuit either, because he could still try to wiggle out again through a funding angle again. Oh, look, my funding fell through. And you said we withdraw the lawsuit. You think if they make that mistake, then it's all on Twitter, because they'd be a bunch of friggin' idiots after he already pulled it once. So yeah, could he pull a switcheroo again? I think it's fully within. It's why if you're following Twitter and you're going for that 54.20 and you were already long it, I would be taking profits. There is no way I'd be trying to eke out another $2.20 for downside risk due to Elon. And I will leave it at that. Yes. Thank you to those who contributed. Thank you again to everybody's here. I will see you tomorrow morning.